What's up, what's up, what's up? How we doing? Streaming a little bit later than we thought we would. I hope you're all well. So this video, as you can see by the title, we're going to be covering the gold and euro markup that we gave out on our TradingView yesterday. We are only 5 followers away from hitting the 500 followers target that we have set for our TradingView. So of course, if you want to follow along and help us reach that target, that'll be awesome. Remember, if you do enjoy this video, drop us a comment and a like, even a share if you really want to share the information to anyone else. It helps us get out to other people that can find this information useful, and also lets us know that you appreciate the markups that we're putting out. So the first thing we're going to do is we're going to pull up euro and we're going to pull up gold. We're going to start off with euro, as this is the first pair that we put out, and we're going to cover what we're looking at. Now there is literature down here. If you want to go and check that out, you can. Of course, if you're watching this video now, it's probably because you prefer to watch something and listen rather than read something. So the overall idea that we have here, you can see that we have several points to track through, and we're going to cover them now. So the main point is that we have this 4-hour range, which is a bearish range. We have trendline liquidity across the highs, and we have existing trendline across the lows. Our bias for this overall is down because it's a higher time frame bearish trend. We want price to shift into the bearish narrative. Now, of course, as you know, we just follow what price is showing us and trade appropriately. Now, when we take a look at what we have, the 4-hour range sets the tone for price action delivery pretty much off the bat, because we expect price to travel down. We have one area of supply just above. We have liquidity across the short-term lows, and we have our target 4-hour low right here. Now, this was given out 16 hours ago, and if you do follow me on TradingView, you of course would have seen that. So we're looking for one of these moves to take place. Now, you may look at these arrows and think, this literally makes no sense. There's so many things going on here. All it is a rough blueprint of what may happen. Unless price actually starts moving and giving us sort of context, you can only speculate. Remember, speculation is fine, but you don't trade off of speculation. You trade off of probability, and you get probability through price delivering a certain direction. So straight away we have the possibility of price just continuing this downwards move out of our range. That's the first option we have. Then when we get to the 4-hour low, we're looking for price to either break through and reach down for the liquidity placed below the lows right here. And we of course have this area of demand as well. So if we do break through the lows, we're looking for either a short-term sweep of the low and then a push back up to the excuse me, area of supply. This is going to of course change depending on if we break structure here or not. If we do, then we'll have a new high, new area of supply. So this idea would be invalid. The main principle is if we sweep this and we push higher, then we're going to look for price to either go bullish or bearish out of this area of supply. Now remember, we had bullishness across the whole of last week, except for the back end of the week, which caused this downwards movement here. We had a nice solid push up through the front of July, and now we've started dropping off again. But that's great, because we are looking for bearish bias, right? We know that because it's higher time frame bearish. So right now, if and when we break through here, we're looking for this point to be hit, because this is a high liquid area. If we react here and we push back up, we'll of course look for that 4-hour range to continue selling. But this is the main area of demand that I'm looking at, because if we push from here, there's potential for pullbacks within the daily high to daily low for then price to run bearish again. Now, as it stands, I personally would rather try and short this than long it, but there is potential for longs. So I'll play this so you can see where we're at right now. You can see that we've sold off from this morning. So we'll go over to the Euro chart right now, and you will see the basis here of what we have. This is the same chart, and you can actually see the first scenario we spoke about is playing out. Price action is just continuing bearish right now. So we're looking for this to come down and take out that liquid low. Now at this liquid low, it could easily pull back, like I say, and at that point we'll have a new 4-hour range. If it decides that it doesn't want to do that, and it decides actually I'm going to continue going lower, then we're just going to look for this point here for either a run lower or a run higher. Okay, we're not going to overcomplicate this. Exactly the same as we did the week before, and the week before that, and the weeks before that, right? We're just following it to see what price is doing. Remembering that it is creating liquidity across these highs. So if we do push down deeper, we may sweep this before running back into the low direction. Now we have opened up an FEG on the daily time frame, so there is potential for some more downside momentum. The principle is that we follow what price is showing us, and at the moment it's still showing bearish, so we're going to keep that at the forefront of what we have. So there isn't a huge amount to talk about here until we get down to this low or down to this area of demand. So until we get there, just let price do its thing. If you caught a short up here, amazing. If not, just wait for it to set up the next move. So let's go back over now to gold. Gold is the second pair that we gave out. And you can see again, we gave this out 15 hours ago. And gold is one of those pairs that looks like we're trying to focus on one side or the other, but we're not. It's a very neutral bias. All of these markups are very neutral. Even if we have like a more of a short-term outlook, or we'd prefer to go short, for example, doesn't mean that we won't long it. So you can see in here, I've said it may seem like we have no plans of buying. This isn't the case. Now, if you want to go and read the literature, as I said before, you can find this on my trading view. You can go and read that and follow along if you do hit the follow button on my account. A link for it is down below, by the way. Main principle here. We created this trendline liquidity. We took it out. We retested the upper end of this, so we created a higher time frame order block. We came back into that order block and we've pushed away. Now the basis of the move that we're in right now is that we want this to shift into the higher time frame scenario, which is bullish. Now it actually looks quite similar to Euro, but we're looking at this candle right here being the candle responsible for the previous break structure down. Okay, we're also looking at the area of supply above, because this is a key area of supply. It's where the imbalance is created and price begins to shift lower. And then we have our extreme, which is the higher time frame area of supply as well. Now remember, having these areas is fine, but unless you actually get to them, they hold no relevance for us. So always focus in on what is price doing at that point. Is it reacting here? Is it selling down? Now we have liquid lows right here. We have our 4-hour low. And we have an area of demand which is untapped. And price has the potential to run higher. So what I was looking at really is price selling away from here, coming into this and then going long. Or price just buying through, selling away from here, or not reacting at all and selling away from here. Now, every time I show you these charts and we walk through these, and you may look at your own charts, don't become too fixated on the principle of we must see this happen from this point. Mark up potential areas, wait for price to get there if it gets there, and then you can begin to assess the principle of what would I like to do, where does my entry model fit within this area. We're not trying to get the market in a chokehold and try and predict every single movement. If you try and do that, you're going to be honestly hurt. You're going to be hurting, okay? So just keep it realistic. Keep your bias open. And that's why we always give the option of we might sell or we might buy from here. If we get into this area and I see a sell model, I'm selling it. Just the same as if you see a clear buy model. You're going to buy it, right? So just keep that in mind. Let's play from where we are now. And you can see a short-term reaction from the candle causing the breakdown in the first place. Let's go over to chart right here, and you'll see that we are reacting slightly at this point. Now, same principle, we failed here with demand. Price broke straight through, so I'm looking at this point or this point for a push lower. Ultimately, we want to see price break bullish. So what I'd prefer is price to come down, take a low, break the high after either a sweep of the liquid to the left or a tap into the area of demand, and then price shift up into these highs. Now remember, it doesn't have to do this. This is just our preferred option for price. Now, when you go down and look at these lower time frames and you look at the areas, focus in on the points that, if I'm going to sell from here, what do I want to see? Don't just expect this area to hold. Now, like I said about Euro, we done the same thing on gold. We've opened up some higher time frame gaps to the downside, meaning that there is potential for lower prices within here. But we don't want to over anticipate that when we know full well the liquidity stored across these highs has potential to be ran. Right now, we can see structure is bearish. We have no reason to expect this to go bullish just yet. Higher time frame is bullish. We've covered this already. That's why we're looking at this point right here for that expansive move higher. So don't feel like you have to pressure yourself into the principle of I must be correct. Have an outlook on the week and use it to guide you through potential for the coming move. So if we just go back and look at this markup, for example, notice the way that we broke this trend line move here. So we had the liquidity starting to be taken, have an area of supply. I'm looking at price sort of coming back in line with this and then selling back away. Now, it doesn't mean it has to play in perfectly to what we have marked, but it means that's the idea that we have. We expect price to either break out of this range and run bearish, run up to here ish, give or take, doesn't have to be to the exact point, and then sell off, or price to just continue back bullish again, and we're going to aim for this high. So we play it. What did price do? It came above, and then it played up a little bit higher, and then it sold off. So we had a pretty good template and idea of what we expected straight away. Now the same principle here, if we come down and we look at Euro, this is the same idea with Euro. We're in a clear bullish move. So if we break the low, we look for the short, but we know price could go bullish from here. Same right here. If we're in an area of demand, price can easily go bullish, and it may play off the area of supply to take out the liquidity, or it's just going to break through and we're going to be going higher, right? Really simple. We're not marrying a bias here and saying it's definitely going to do this. Play price. What did it do? It failed through, so what do we look for? We look for price selling into here to then potentially go long. Now when we go back to the price action chart, and I show you again, notice how this area, we don't have this marked up anymore. Why is that? Well, we're in a different range now. Price action overall has shown that its intention to play higher from here was pretty minimal, and we're expecting a slightly different scenario. We don't want to be married to our bias, guys, okay? So please take the time to go over to my TradingView account. You don't have to follow, of course. It's not, it's not mandatory. But I highly recommend, if you just want to stay up to date with the ideas that I'm following, which is generally going to be the blueprint for the week, it's always worth just having a look at the literature provided, checking back over some of the previous price action, and you'll see the way that it hits these points and you see a pivotal shift in price action. This is where you become the trader and you take the opportunity. Remember, we don't have to be in every single move within the market. We just have to know when we want to actually trade. So guys, I appreciate everybody that has been on this live stream with us. It's only a short one today, guys. We are going to be making a reappearance on YouTube with live setups, live analysis, education, of course the outlooks, but there is going to be a slightly different layout, and we'll explain that to you guys nearer the time. But if you haven't already taken a trade today, then make sure you trade safe. Make sure to hit that like button if you enjoyed this. Thank you for everyone joining. Void, thank you very much, my friend. Appreciate it. I'm glad you're here. I'm glad to hear you've enjoyed it. And we'll catch you all in the next YouTube video. Have a great week, guys. Remember, patience is key. Stick to your rules, stick to your risk, and always trade safe.